In this video, I'm going to talk about the 3 most compelling reasons why you should choose dividend investing over growth, cyclical, value, or penny stock investing. If you're new to the channel, then get down and subscribe to it. You'll get plenty more of this, all the new content I'll be putting out, and hopefully you do enjoy the content. If you do enjoy the content, then leave a little like as well, because that really helps the channel, helps it push it out to as many people as possible, and helps me share this message. Share it with a friend and pop down in the comments your thoughts on dividend investing, whether you prefer it to any other type of investing, and what your favorite dividend stock is. Let's get straight into the video. This is what I love best. I love dividend investing. I know my last few videos have been about penny stocks. I do find them quite exciting, investing in penny stocks, but they're way too volatile and way too risky, I guess, for my liking. I do have a high risk speculative portfolio to try and beat the market, and got quite a few penny stocks in there. Lots of penny stocks. I had a lot of chatter about them, like BNGO, and I certainly was around 350% up in BNGO in less than a month. You won't get returns like that in dividend investing. You won't get returns like that most of the time investing in penny stock. It's very high risk, high reward potentially, but really high risk, and I much prefer investing in dividend stocks. I'm going to go through 3 main reasons why I much prefer dividend investing. Reason number 1, I love dividend investing for the monthly and the quarterly returns. It's obvious. That's why somebody would invest in a dividend stock. I prefer it because I get my monthly and quarterly income. I like those monthly returns. I love the dividends that they pay. For reason number 2, I'm going to pass you on to Kevin O'Leary.
My mother used to take 1/3 of her paycheck and put it into large cap dividend paying stocks and corporate credit back in the early 60s. And when she died, this portfolio had existed for 50 years. And as an executive, the first time I got to look at it, it was amazing. If dividend paying stocks and corporate credits over 50 years, you can't find an index that beats that. When I started to do some research, I found out one interesting fact that changed my investment philosophy forever. Over the last 40 years, 71% of the market's returns came from dividends, not capital appreciation. So rule 1 for me is I'll never own a stock that doesn't pay a dividend, ever. If you look at the volatility in the market around names that don't pay dividends, they're extremely volatile because there's no cushion of yield. What's the value of a stock that never returns capital to its shareholders? I don't know, because the only way you can make money is if somebody else is willing to buy that position at a higher price for some emotional reason, perhaps, or for some foresight that maybe the company will return capital one day. The only thing that matters is free cash flow. That's it. There is no other reason to own a stock. Look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company, I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked. It's just a rotating door where management extracts capital, never returns any to shareholders. And I look at that and say to myself, why don't I just avoid that altogether? If it doesn't pay a dividend, I know that 71% of the time all the returns come from dividends. Why should I own a stock that doesn't pay a dividend? And I never will.
That kind of speaks for itself. It does play into point number 1 in the sense that you get a return. I like point number 1 because I get my monthly and quarterly returns. But point number 2 is the power of compounding and the power of dividend investing over the long term. It's completely passive. You don't have to do anything for it. You just have to own the stock and you get paid for it. Now you compound that time over time, and it yields phenomenal results, as Kevin O'Leary has just explained. Point number 3, dividend investing is going to form part of my retirement plan. So it's a big part of what I'm going to be doing. I would like to get to the point where my dividend income covers all my bills, expenses, and a bit extra as well to play with, some fun money. But essentially I love dividend investing because I can see an end in sight. There's light at the end of the tunnel. Does that kind of make sense? Knowing that at the moment I'm receiving over £100 a month in dividends, I know it's possible, and I can see that it's actually happening, physically happening, which is fantastic. Now I'm 31 and I don't know that when I get to retirement age whether there'll be much of a state pension to fall back on. My retirement plan is effectively just to build up a dividend portfolio to the point that I'm earning enough from it. Hopefully by that point have paid down mortgages and loans and debt and whatever else, and I can live on very little. I'll keep building and building and building a dividend portfolio until I've got enough coming in to cover all bills and expenses. So that's reason 3. It's a retirement plan. It's an end in sight. It's a bit of motivation. Certainly at the moment I can see it coming in and it's working. I've got that motivation to work towards building that retirement plan for the future. I'll openly show you, you've probably seen this before, how I record my dividends coming in. Very basic, very simple, literally just a line on a graph and a number that line correlates to. So we'll get into the computer, quickly show you that just so you can see exactly what I'm going on about and exactly where I might be able to see it going in the future. So this is the dividend portfolio. It's actually not all dividend payers, as you can probably see. I've got my 10 EV stocks in there as well as the experiment, and 1 or 2 others and companies that were paying dividends that are now not paying dividends that I may or may not hold on to see if they start paying dividends again, or I might sell out and reinvest them back into dividend stocks. So this is what I was on about in terms of my graph. It's so simple to use that anybody could do it, and it's just nice to see that it's moving in the right direction. I've only really started this back from last year and wasn't investing throughout the middle of the year, as you can see, and then it's kind of gone up from then. Well, not kind of gone up, it has gone up massively. It's jumped up in fact because I invested a lot of money around the beginning of the year last year. Obviously when everything started to go a little wrong in the market, I bought up a lot of stock. So this is just an illustration. So in January I've had £110 in dividends. I know that if I'm £100 down for some reason, or I need 100 quid, then I've got that come in dividends. It's monthly income, but I'm going to be compounding that back into the market. Also, just to go back to what Kevin O'Leary was saying, let me just show you this quickly. So the power of dividends and compounding, the growth of $10,000 between 1960 and 2017. Price only, no dividends, S&P 500, that would then be 460,095, which is quite astonishing growth from 10,000. I mean, that's amazing. But if you compound the dividends as well over time, in that space of time, 57 years, your 10,000 only would now be worth 2,571,920. So there's just so much more to be had from dividend investing. The more that comes in dividends and the more that's reinvested back into the fund, back into the market, it then gives back even more again. So it's just compounding effect. So that's one of the key things. That's what Kevin O'Leary was kind of getting at there. And then of course you build yourself up to a few £1,000,000 portfolio, and the dividends themselves, you should or could live on that on its own, and there's your retirement fund. So I thought it was important to show you that as well. I've done another video similar to this years and years ago, but now that I've got a few more subscribers, I thought I was quite keen to get that out there and show you that as well. So that's it guys, just wanted to quickly show you that. That's really important to me. Point number 3, retirement plan. I can see an end in sight, I can see it working, and that's what I'm going to be falling back on. And at the end of the day, it's another stream of income, it's another source of income. So if I'm suddenly short £100 one month and I need something, I can pull out of my dividend portfolio some dividends that I've been receiving and use that if needs be. If you have enjoyed that video, back to dividend investing for the moment. We'll be talking about penny stocks and high risk portfolio investing again as well, because it is quite interesting and quite fun and amusing. I shouldn't call it amusing really, investing. It's very high risk. You shouldn't do it unless you've got a strong stomach. So that's it for this video guys. Head down into the comments and let me know what your best dividend stock is, what your favorite one is, what your retirement plan is, if that is exactly what you're doing it for, and what I might have got wrong in this video. Do call me out and welcome the feedback. Subscribe to the channel if you haven't already, if you enjoyed the video, and like it while you're down there, because that helps to get the message out to as many people as possible and spread the joy of dividend investing. And if you've got someone that you feel probably needs to see this, then share it with a friend as well. But I'll leave that there guys. I hope you enjoyed the video. I'll catch you guys in the next one.
This is extremely conservative investing. This is for the long haul. These tools are not for, as you're suggesting, for spicy, the hot stock du jour. I've done that. I've been there. Let the young legs do that. I have zero interest in that. I don't care what the hot new stock is. When a company comes public, I won't own it either. It's got to prove to me over multiple years that it can continue to generate cash before it even fits into what I'm doing. So I'm really boring, and I like it that way. I view my portfolio and my trusts and my positions as a chicken on a spit dripping cash. Everything has to generate yield, whether it's a fixed income position or an equity. It has to, the only reason it can be in my world is it's generating capital back to me. I take that, I disperse it. The family lives off that, the charities I've committed to. So I'm always looking for a company that can help me with my problem of generating more yield. I mean, I can't even imagine buying a stock that doesn't pay a dividend. Why would you do that? What would be the reason you would do that? I don't get it. So to me, that means about 28% of the market, to me, is just speculation.